Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep. With your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, everybody. Welcome to this Monday edition of Benzinga's Pre-Market Prep. Spencer Israel, Joel Elconin, Dennis Dick. Well, Joel is here, but he's having a hard time connecting to Dennis and I right now. So he's here. Let me see if I think he's coming and going. But I don't know if we'll be able to see Joel today. We'll definitely be able to hear Joel today. What's on our radar? Late Friday, there were some S&P rebalances announced. I want to talk about that. I want to talk about Bitcoin. I want to talk Eli Lilly. I want to talk the airlines. We'll take questions from our chat. Our two guests today, first up is Tim Quast. He is on the show every Monday from Market Structure Edge. And then at 9, I'll be joined by Chris Temple, editor and publisher of the National Investor. That'll be at 9 o'clock. Don't forget to hit that like button. Today's show is also sponsored by Market Structure Edge. It is the first decision support platform for traders built on market structure. To learn more, go to marketstructureedge.com. The link is up on the screen there. Joel, I said we can't see you, but we can hear you, which is all that really matters.
That's right.
I'm going to bring up your charts here. How are we doing this morning?
Can you hear me loud and clear?
We hear you.
Okay. Not not much of a volatile range overnight. A range in and of itself. Been up and down. Been as high as 47.75. That's above Friday's high, but it's not the all-time high. That all-time high for this contract is 39.49. Pre-market low 24.25. Nothing really down there to lean on. Crude, finding some resistance here. We talked about this last night. A trio of highs at 66.25. Now you got that to 66.40, but now you're under $66 and down a dime at 65.51. So there's a good level potential triple top here in the crude oil market. Gold up 840. That's at 1728.20. Trying to get back up to that 1758 resistance area. Silver, that's up almost a quarter at 26.15. And Bitcoin, the buyers were out over the weekend, pushing it over 60,000, over 61,000, but a reversal. We are now down $1,500 at 55,550.
Blow off top.
What'd you say?
Blow off. Oh, you can't hear me. Blow off top.
I heard you. I don't know if it's a blow off top or just a little correction. I mean, little overbought over the weekend, some profit taking. I mean, how can you call it a top yet? Maybe if it takes out, it already traded below yesterday's.
But that's a key reversal.
It is. Okay.
Key reversal. Should we explain that? Explain
sure, go ahead.
What a key reversal is.
Go ahead.
Makes a new high on the day and then makes a new low on the day from the previous day's range. Did I get it right?
You got it.
I'm not that good with technicals. So I'm looking at a key reversal. It's usually a bearish signal when you get them makes a new high because everybody's like, yeah, this is it. Buy. And then you got some waves of selling and then it makes a new low and then all those people are spooked. That's kind of the psychology behind a key reversal. But, keep an eye. I mean, I'm still long Bitcoin, so I don't think the story's going away. This NFT stuff continues to go as it does. What's Ethereum look like? I mean, because Spencer, correct me if I'm wrong, because I don't know crypto that well from a fundamental perspective, talk fundamentals, but isn't most of this NFT stuff done through Ethereum?
Yep, that's the network that it runs on.
Yeah, so what's Ethereum look like?
Well,
I mean, what's Bitcoin do for us? Ethereum's giving us NFTs now, so that's pretty cool. What's Bitcoin doing for us?
Well, Bitcoin's got first mover advantage, right?
Why do they have? And then this is what I've argued even with Mark Yusko in the past. Why do they have first mover advantage when it's not a company? Like, how do they have an advantage? Nothing changes.
Well,
Bitcoin. Can anything change in the Bitcoin network? Can it change? It's already built, and it's not like a company that's having board meetings and figuring out what to do next. So I would argue there's no such thing as first mover advantage when something can't change.
Well, here, first, let me pull up a chart of Ethereum so y'all can see.
I was wondering if I should trade in Bitcoin for Ethereum. It's a serious question.
Yeah. Look,
A lot of people,
you're all about like the practicality, right?
Yes.
Yeah. So
And now I have a practical use for Ethereum. Not that I'm an NFT fan at all, but I don't think this, is this. I don't think it's just as. I don't think it's going away immediately. It might go away eventually, but I don't think this NFT thing's going away anytime soon. So now I have a practical use for Ethereum. Can you? I guess you could use, but how does it work? I don't totally get it. Like, how's Ethereum? Why can't you use Bitcoin for NFTs?
It's a different network. I'm not going to pretend to understand
Okay.
the intricacies, but it's a different network. What we can do is we can get like Benzinga's got several people who are.
Let's bring one of those guys on.
Let me reach out to like John G, get him on the show because John G and I were talking about this over the weekend. Actually, he's all about this stuff. So
let's bring one of those guys on and answer those questions there, because I want some exposure to crypto, but I'm just wondering, maybe I should trade half my Bitcoin for Ethereum. I know the prices, but you can say you're chasing Ethereum, but if I'm trading in Bitcoin, I'm selling, up here as well. So it's not so much of a chase because I am exposed in crypto. It's just moving my crypto exposure maybe to have both.
Yep.
So anyways, that's my question is, even to the chat, should I sell half my Bitcoin and buy Ethereum with it? I'd be willing to do that if you guys talk me into it. Give me the reasons. But NFTs, if it's running on Ethereum, I sound like I'd rather own Ethereum.
I mean, Bitcoin has scarcity. I mean, that's and that's it. I mean,
I don't buy that either. And why? Because it's so divisible. I mean, you can say something is scarce, but when you divide it out to 8 decimal places, is it really that scarce? I mean, you listen to Pomp all you want on CNBC and all these arguments. He's had it right. He's had it right. Mark Yusko talked us into this. Obviously, he's partners with Pomp on some different ventures there. He's had it right. Why? The only reason I got it long is because I think there's a story there. But I don't buy the first mover advantage. I don't buy that we're all going to be transacting in Bitcoin. I think we could eventually transact in some type of crypto. It just seems like Bitcoin's kind of inefficient. So I don't know if Ethereum is going to be that. I don't know. Nobody knows anything. We go back to that. But I just wanted to get off zero. But maybe I want to get off zero Ethereum. People are saying buy Ripple. I don't know anything about Ripple. So
well, Ripple I don't know about because there's a whole thing with the SEC there about what is Ripple. Is it a currency or is it an asset? The SEC is because Ripple like for a while had like a branding issue where it had the company had the same name as the asset. So now it's called like XRP, but I just know the SEC is involved, and that would give me pause.
It's not a crypto show; it's an equity show. No. So let's go talk some stocks here.
Yes, let's talk about it.
Because I don't know anything about crypto. I know a little bit about stocks. Let's go Eli Lilly, because this has got some Alzheimer's drug data here, which I initially read the headline, thought it might be good. I guess I devil's in the details here because they've turned around and hammered stock. What's going on?
So the drug, I'm gonna try to pronounce it, donanemab. It was a phase 2 trial. It met the primary endpoint of the trial, which was to slow down the rate of cognitive and daily function decline, and it slowed down that rate by 32%. But it did miss several secondary tests, is what they're saying, is what the release said. If I could read a little bit more here. There's just more, but that's all you need to know. There is it met the primary endpoint, but I guess you could say it missed like secondary endpoints.
Yeah, they don't like it when you miss any endpoints, really. So obviously, that I read the initial headline and it said it was decent initial headline, but again, devil in the details.
Here we go. On secondary goals of the study, while patients on the drug did numerically better on various other cognitive and functional scales than the placebo, the differences weren't statistically significant in some cases.
Doesn't sound great.
It sounds mixed. It's mixed. It was good and bad.
Again, if anybody can get a drug through for Alzheimer's, we know it's going to be huge. We still haven't got the final decision on Biogen. We know the recommendation. Yeah, we know they had whatever it was. Their panel recommended not to approve, but we never got the official regulatory decision from the FDA on whether they were going to actually give this approval or not. So again, I guess we just sit here and wait for that, because Biogen has already priced in I think a lot of it got priced in because we had the initial. Remember that crazy move in November? We had the initial pop. It's like, oh, they might actually approve it, and then the board came out and they said recommended not to approve it, and it had the 100-point pop up, and then 2 days later it had the 100-point drop. So it's kind of priced in to a certain extent that they're probably not going to get it. So I don't think you're going to see a 100-point drop in Biogen. I'm long Biogen. If it doesn't get approved, I think you'll see a drop. I think you'll see it drop like $20-$30. So but with Lilly here, I mean, we're so far away from any type of an approval or anything like that. We're still just trying. So that's why, you're not going to see the stock hammered here, but down 14. Is it a buying opportunity, Joel? Thoughts?
Lilly, man, this is really in no man's land. Did I text you to short this? Was that, or did I dream that? I remember I thought I saw some Lilly news the other day. I don't know if I texted and you said something, and I don't know.
I never got a text. It wasn't me. You didn't text me. I texted somebody.
I would just say, I don't know where.
Oh, I wish I would have got that text.
Yeah. Well, I'm going to tell you, your pre-market low was 191, but just right here, just jumping out at me is $200. So if they're saying all those lows at 200, it gets back to 200, that's going to be the bogey. I know it doesn't even fill the gap. So I give it a zone. You got yesterday's low at yesterday's low at 202.28. That 200 just looks pesky. So until it can get back above that area, I think you have some serious downward pressure on this stock. It had a crazy move in January, and very unusual for Lilly to have a 40-point move in January. Then it was just hanging out like, yeah, man, we're going to get some good news. We're going to go back up to 220. Nope. No can do. So I see a lot more downside than upside in this thing. Would not be starting a long position at this area. I'd rather buy it at if it closes, a couple days over 203 than try and pick it up here at 194.
One thing to consider is that a lot of the mega cap pharmaceutical companies have not been performing well as of late. I mean, you can just go to the big three, Merck, Lilly being one of the big three, but Merck has been in the gutter. Pfizer can't seem to get any legs going at all. And then you can look, even if you want to go into secondaries, I mean, just looking through any mega cap pharmaceutical company, a lot of them haven't performed very well. I mean, IBB is off the high significantly too. So you wonder if Lilly has a little catch-up trade here, a little bad news. Could it leak down to 180? Yeah, there's room. You're right. It had a big run up there from the 170 to 200. So you're right. Got down to the 165, 170 area. I think there's lots of buyers, but you're right. You're kind of buying in the middle of nowhere if you're buying this dip.
And was this run up predicated on something good coming out of this?
I think the COVID. I think a lot of this was their COVID drug too, was it not, Spencer? There was. I remember a few headlines just going from my goldfish memory here, but I can remember seeing in the Pro a couple breaking headlines there about their COVID therapies. So I think you've had a couple pops in there with COVID.
Yeah, and speaking of that, I'm done. I got my second dose yesterday. So
nice, Joel. Vaccinated.
2 weeks. I'll be.
I hope it wasn't the AstraZeneca one.
I'm glad I didn't get that. Everyone wants the Pfizer one.
Anyway, I guess there has been a couple issues with the AstraZeneca, but then they were saying there's been I don't know how many millions of people that actually got the AstraZeneca, and there's been 30 cases of blood clots. But I mean, if you look at that on a percentage scale, they said in the overall general population, when that many people are, being, under, or there's going to be, just random cases like that. Yeah. So they're saying that's not statistical at all, and it's just random. Yeah, so, of course. Anyways, it gets you thinking, though. I know Denmark has stopped the AstraZeneca right now. There's 3 countries, I think, that have actually stopped using the AstraZeneca one for reasons like that, but. Not to scare you away.
I don't even think the AstraZeneca is that's not even approved in the U.S. Right? For emergency.
I don't know if AstraZeneca. Are they using the AstraZeneca one?
I don't think it is.
What are they using?
No, because there's a headline from Friday that they're preparing to file for emergency use in the U.S.
Okay.
So they're not even approved in the U.S. yet. Okay.
So we got Pfizer, the Moderna,
and J&J.
And the J&J. Those are the 3 that are going through. What are we getting in Canada? I don't know if we have any in Canada. we got a few. There's been some people vaccinated, but man, we are falling behind.
Can you get across the border? Because Lisa's office is they're going to.
Oh, so I could come get vaccinated if I went across the border. That would be good news. But no, unfortunately, I don't think they're still letting anyone across the border. So border's been closed for a year. just going across, only for essential services. And you can fly across the border, though. So you can get away around it that way. You can fly. So maybe I should fly down there, get vaccinated from Lisa, and then I can come back.
Okay. All right. What else we got? S&Ps we're leaking a little bit. Nothing major. Down by 3/4 of a handle at 39.32. All-time closing high on Friday. So I don't know. Quad which week? I don't know. Just kind
You
of
can blame tech. Tech is the reason that
you
we're.
can blame tech all the time. I know.
Let's just put it in perspective and do a technical on the Qs. Bring our technical analyst here because we stopped out 2 days ago at a key level in the Qs. And yes, we've had a nice rip and rally here, but we have had this trade, and I have this written on my paper to talk about, so it's probably a good segue. I'm going to ask you the technical level in the Qs here in a second, though. But we've had this trade that has been very pronounced in the last 2 months where they have been selling tech and they have been buying value. Even before tech started to roll over, value had taken over the wheel. So now you get the massive sell-off in tech, and it bounces nicely. Is it time to reallocate some of your tech stocks to value stocks? Is this value trade, which has underperformed for a decade, and I mean seriously underperformed, is this value trade finally time to start jumping on board? So what are your thoughts here? And give me the Qs level too.
The Qs level I'm giving you is you made that all-time high back up in the 338.19. You came down just under 300. You know, you go halfway back here, and that was actually the high from the other day at like 317. So, man, or even that 320 high, unless you get back above this high, what was that on Thursday, 319.86? I still think the path of least resistance is down here, and I just don't think it's time. I don't want to say it's over, but you've had such a long-term trend reverse. Is it going to reverse right back out? I don't think so. I think there's more downside here in these stocks. They just don't. The rallies, I mean, Apple can't get away from like 120, 121. You have Amazon flirting with, a couple days staying under 3,000.
Yeah.
Facebook, I just don't think. I think it's here to stay.
Yeah, I don't like the charts on the mega kept. I don't like the charts at all on any of the tech stocks, to be honest. If you're loaded up with tech, I think it's right now is the time to lighten up. I am loaded up with tech in the long-term portfolio, but I'm still somewhat comfortable with it, although I wouldn't mind reallocating some. I don't want to chase stocks here, though, too. I mean, you can bring up some. I own Nucor. Look at what this has done. I mean, this just gives you a feeling. But, a better example is like Viacom. Like, you're looking at the value stocks.
Yeah.
They hated it. I mean, question. Could the Reddit revolution, because let's be honest here, this Reddit revolution wasn't revolved around growth tech stocks. This was revolved around value. I mean, it started with GameStop, and they thought, there's value in here. Deep value investor, roaring kitty. I mean, value right in the name. Is this Reddit revolution potentially the turning point to get stocks from growth to value? Is it? I'm asking the question.
It already is.
Well. We've seen it, but does it continue? Like, if Reddit is so focused on deep value, and they're obviously focused on everything, they talk everything over there. But if you keep looking, the stocks that they're picking on, are beat up companies that, aren't going bankrupt, AMC. Like, look at the whole Reddit list on those short squeeze stocks.
Yeah, I got to bet.
But even Rocket was a value stock. Rocket was totally a value stock. It was trading with a P of like 8, when it was down there at 21. It's still, and I did buy some Rocket, but I don't know. Like, it makes you think, like, maybe this could make the turning point happen. Like, Viacom, the whole reason it's rallied is it had a PE down when it was $30 of like 5. So now it's moved up, and I don't know what the PE is, but it's probably like 15 or 17 or 20. Maybe it's even 20. It's expanded, but it's still not even at a market multiple. That's how much they hated value. They hated anything. We were all going growth. All these other companies were going out of business. I mean, Ford and GM are a classic example here too. I'm long them both, Ford and GM, and I'm long GM in 2 ways. I've written puts and I'm long the stock. So I'm double long General Motors. I mean, this, compared to Tesla in the last 3 months has massively outperformed it. Now, this is the first time in years, But are we moving to a new market where they actually do care about value? Does the Reddit, I see it all the time. They're talking about value over there. Maybe we've changed. Spencer Israel, you're quiet in the background. What are your thoughts here? Or does it just go back to the same thing in 6 months?
Look,
I got some interesting. After Spencer, you go. I got some interesting charts to pull up here for you.
Yeah, we ask this question every time, right? Because value has come into favor, a half dozen times in the last few years, and always for what, like a week or two, and then always it goes back again, and we ask this every time. So we don't know. It's a good thought, Dennis. No one knows. I just know that every time value has come into favor in the last 5 years, we've been like, oh, is this it? Is this the big rotation? And it never is the big rotation. It's always just a fake out. So, look.
It could be the same thing again.
I know I'm overweight growth and underweight value.
Everybody is.
Everybody is. Everybody is.
What an awesome way. If you really believe in max pain, where the market punishes the maximum amount of participants, what an awesome way to do it. Let's switch this over now and pull the wool out from every portfolio that's out there that's loaded up with the Apples and the Amazons. And those stocks may not get hit as hard because remember, those are kind of nowhere. Some of those are value. But let's do the Intel versus NVIDIA. Let's do Intel versus NVIDIA, Joel. Intel is not going down, man.
I love
Intel.
Intel.
Been holding up.
I am. I'm in Intel. I'm in this long term. I'm not even thinking about it. 64. I would love to just to take out 64. But yeah, and you remember I said tongue in cheek about Intel versus AMD. Look how that spread is reversed since 100. So yeah, but did break out the Barons a little bit this weekend, and this writer is pretty good. I haven't seen him. Alex, I want to give him credit. Alex Yuli, he came up with the Nostalgia Index. Okay, so Viacom is the top winner. Check out what's on this one, Dennis.
What do you got? Talk to me.
Barnes and Noble Education.
Blast from the past. Look at Barnes and Noble. When did they change themselves to an education company?
When they did the split and everything. So they're taking.
I miss BKS.
Yeah, when these schools go back, they're thinking this is going to surge. Here's another one that we haven't taught in a while. Fossil. They're talking about maybe Fossil making a run. This is old nostalgia stocks. Gannett. Have you seen Gannett, GCI this year?
Yeah, it's been going. I was in it a couple times. I bought Gannett just for the simple reason that everything that under $1 had gone. So, and it had a ridiculous run. I actually this was back, I can't remember, but I had a really big run. I bought it like $1.50 or something, and then it quickly ran. You know when I bought it? It was like somewhere in November there, when everything just started to go, and I was like, okay, well, they're grabbing anything that's cheap. And and I think I picked up around $1.50, and it was like a week and a half later, it was $2.50, and I sold it. Obviously, I sell everything. $5.67, later, I sold too soon again. But you're right, Joe. A lot of these other stocks.
Pitney
Bowes, another one. There you go.
Too young to remember Pitney Bowes machines, but I'm not. I remember them. Wasn't quite a verb. An old dog here that barks every once in a while, having a good year. Weight Watchers, WW. And then there's another company.
Weight Watchers feels like a stay-at-home play, though.
Yeah. And then this one, I don't even remember. Dennis, have you ever treated DLX?
Yeah, Deluxe, yeah.
You know what they do?
No, but I've traded lots of times. What do they do?
Check company. Make checks.
We're going back to checks.
Yes.
I like that.
Yeah. And then the last three on here was Cinemark. That's fitting in with your.
This is all from Barron's this weekend?
This is all from Barron's. It's called the Nostalgia Index. So far, investors have gravitated to stocks seen long term is old fashioned. Well, we know value is old fashioned. And then also my former company, not that I was an accountant there, H&R Block, which has been having some pretty good commercials as of late.
Well, it's also a tax season, so
yeah. And then those commercials have been good. And then the last one,
they play there, yeah.
Last one was Mattel. Don't tell me Mattel's dead. Look at that. That's a doubler going back to July. So yeah.
Do we want to trade in all of our tech stocks?
Yes.
For all of these old school possibly value potentially Reddit names.
Look.
Yes.
Yes, Joel says yes. He says yeah. We have one definitive yes. We have the chat asking about Palantir. Thanks for the tip, Caesar. If we're going with the value theme, though, Palantir is not going to be on that list.
Dennis, that's going to be a no for me, dog, and it comes down to
no for me, dog. I like that.
And it's just a time horizon thing, right? It's just a time horizon. Like, could I make some money buying all those stocks for the next couple weeks or month? Probably. Yeah. But am I gonna like sell my the investments that I have in growth industries, in growth companies, in esports and biotech for movie theaters and check companies?
It sounds insane. It sounds insane. And I'm not saying to do this. We're just looking at
pointing out
potential here. Growth value I've always liked. I mean, I'm a big fan. We know. Look at my portfolio. It's full of the Googles. It's full of a lot of stocks that would get hammered if they decided to start hating on tech stocks. But I like growth at a reasonable cost. I don't like growth at any cost. And but the Kathy stocks have bounced back nicely. I mean, Kathy had a really good week. I think if you're long a lot of those stocks, I think you lighten up. That's my opinion. I don't think that the worst is behind us on the growth stocks with the high PEs. I think there's still more pain ahead for the high PE stocks. But I think some of these other names Joel just mentioned, they could start to show some life. I think there is a trade in here where some of these other, catch-up trades. I mean, we saw what Viacom did. It's the poster child for value. That's not a 1 week move. This is a 3-month move. So it's not something that, you can say, okay, value gets some love for a week. Value's been getting love for 3 months here now. And it coincides nicely with really all the GameStop stuff. So, and GameStop's not going away either. I mean, it's $274. So when you see GameStop, another thing, when you see GameStop at $274, it tells you anything can happen. Nobody knows anything because there's no logical, rational thought to have GameStop at $274 a share. But it is, and it's not going down. It's not really been going, it's not quickly to give it back. Same reason Joel and I liked it a week and a half ago. At 130, it just didn't want to go down. It was holding on and looked like it was winding up again. I mean, the technicals don't look that bad on GameStop. Yes, I had the blow off top. We can call it, at $350, $348. I had the blow off top with Chris Camillo tweeting right at the very high. So we could call it the Camillo top there. But I mean, you're back here, 275. Still holding on okay. AMC's making new highs today. The stocks aren't going away. And you know what they all have in common? They're not growth names. These aren't stocks that are ripping, the top line sales growth here. They're seen as, hey, these are underpriced companies that might come back. AMC is like a Barnes & Noble. It's like the kind of stock that, if you think about what this isn't a growth stock. This is a stock that was perceived as many people thinking it was going to go bankrupt. And you know what? Reddit's saying it's not. Reddit's saying there's value here. I think the Reddit investors are value traders. So if you think this revolution in Reddit continues, value could have some legs. That's my thoughts.
Aren't they going to go in public too? Reddit doing like an IPO too? I mean,
there have been some rumors about that. I don't know.
They'll SPAC it up.
Maybe.
I was looking. I brought up
SPAC's still horrible.
Who makes Tiddlywinks? Remember Tiddlywinks? If you want old nostalgic things, remember that game? Or are you probably too young for that?
No,
you're too young.
You're dating yourself once again on this show.
I was wondering what was on the screen there. Is that
Tiddlywinks?
What are those? Let's invest in that. Welcome to our new world where we go a blast from the past and we like investing in things that were cool 50 years ago.
Yeah. Yes, why not?
It's back. History. What's the Ryan Dietrich saying? History doesn't repeat itself, but it sometimes rhymes.
It rhymes, yeah.
There you go.
I don't know. Rob
said,
I don't know.
Rob said that at the show last night about.
But history. We joke. But there is, I'm somewhat serious here. This has been a serious, move to value. And you know what? I don't think it's going away anytime soon. I was trying to talk myself out of selling my NUE, which has had a ridiculous run, and it got back up here near 70 again. I've been in the stock for years, and every time it gets near 70, it fails and goes back down. It's right there again. I was like, should I sell it this time? I'm like, I don't know, though, because you know what? NUE's got some value. It's got some dividend. It's not trading with a crazy multiple. It's the kind of stock that people like in this environment right now. I don't know. Berkshire Hathaway quietly, Warren Buffett has made new all-time highs here once again 3 days ago. I guess he's off, but he's breaking out. S&Ps didn't make new highs. Or actually they did, sorry. S&Ps did. Qs didn't make new highs.
Right.
So I don't know. If you're all tech, all in, all growth, I think now is the time. We've had a nice rally in all the county stocks. I think now is the time to lighten some of those up. And not necessarily buying Viacom. It's already had the move, but maybe finding those laggards. Maybe finding those kind of stocks, those value names that haven't had the significant run yet. If your PE multiple on your portfolio is 50 or 70 or 100 right now, I think it's time to maybe adjust a little bit. That's my thoughts.
And we got the stimulus checks coming soon. Some of that money will be going into the market. We'll see where it goes into. But there's one thing. If you do get into, you're buying high if you go in with some of these things, some of these issues. But
like Viacom, you are.
Yeah, Viacom. But some of these other ones, not so much. But you could have said that about Amazon the whole way up. Oh boy, I can't buy it at 1,500. Can't buy it at 2,000. Can't buy it at 2,200. So Dennis, instead of like laboring over this NUE, why don't you just, I do see that $70 area that you're talking about, but maybe put a stop in under 65, and then so you're giving up $5. But then if it breaks out, if it comes back down to 65, then you can maybe look at it as a failed breakout. But if you throw it on there and just forget about it, monthly support in that area, then if it breaks up, you keep moving the stop. It's been up there a few times on the monthlies. I see what you're saying, and it hasn't busted through, but we'll see. It's not even, what is it? It is over 70 today, trading at 70.36, or just keep an eye on a high close in the move, Dennis, and then that will give you a key if someone's trying to wiggle out. 8:36, have we cut into Mr. Quast this time?
We have Tim here. I just want to say Greg Martin's on the same page as me with Kodak. Give me Kodak. That's value. That's nostalgic. Give me Kodak. All right. It is
Kodak,
Monday.
Bitcoin, healthcare. They do it all.
They do everything, baby.
They do what's hot.
It's Monday, which means it's time for Market Structure Mondays with Tim Quast. Let's do it. Tim, good morning, sir. How are we doing today?
Good to see you, Spencer. Well, thank you. Dennis, Joel, good to see you guys.
We're talking about value.
You're talking about the microcosm of the market, Kodak. Right, yeah. Kodak. Everything in one. Yeah. You could buy the S&P 500 or Kodak.
Buy Kodak.
Same thing.
Hopefully the same exposure. Just kidding.
What are your thoughts here? Let's bring it back. Let's get Tim's thoughts, though, because he's got a lot of value names that he looks at, too. Like, we've obviously seen a significant rotation from value or from growth to value. Mm-hmm. And in the last week, we kind of saw that trade come off a little bit where growth really picked up the slack. Growth probably outperformed value last week. Is this an opportunity to lighten up in some of the growth names? And we can just grab a few of those if you want, and if you want to do the market structure on any of them specifically. Okay. But let's go to Palantir, which is, a stock that's very much a growth name. It's a stock that got beat up from 40 to 20 in the last month, but it's come back here. We were down 27. What are your thoughts? And we had a tip here, too, in the chat, so they wanted Palantir. So let's PLTR to Tim.
Okay. Well, on the Ides of March, you always want to be careful about, trotting something out and saying, this is it, because it could be Julius Caesar, right? The Ides of March for 44 BC, that's when Julius Caesar expired, and it was March 15th, which also is the day when the Romans want to settle debts. By March 15th, you got to have debts settled. So I think the debts are settled in Palantir. I own Palantir. Remember, we talked about Palantir 2 weeks ago, Dennis, and how to me, from a market structure perspective, and that's the only, I'm not smart enough to think about things but in any other context than that. But from a market structure standpoint, it looked pretty attractive. And for you folks who don't know what the term market structure means, that's the behavior of money behind price and volume in context of rules. And there's an important lesson about the market. And I don't mean to to criticize the folks who are on TV all the time, who try to turn every day into a microcosm. So at 2 p.m. Eastern time on CNBC, somebody will say, well, notice how materials are up and tech is down. This is the reopen trade. And this is about economic growth. No day is a microcosm. It is not how the market works, particularly when 65% of assets, and I'm coming around to Palantir, we'll take a look at this, but I think this is an important concept heading into options expirations Wednesday through Friday this week.
Yeah.
That the market does not give you a microcosm every day, particularly with 65% of assets now in passive vehicles like indexes, quants, exchange traded funds. There are 18% of market cap ties to derivatives like options and futures. And those things have time frames and patterns and context. And so if you bought tech on Thursday and then Friday they went down and you say, oh, I've missed the cycle of one day. One day is not a pattern. One day is not a trend. One day is not a cycle. So let's talk about, I'll share my screen here and let's answer the question about Palantir. And how would you know? The hardest thing for any of us as participants in the market is to know when to do something. There are all kinds of great stocks and lousy stocks. Let me get myself out of the way. But how would you know when to do something? So for those following along, this is Market Structure Edge, marketstructureedge.com. You can do this. It's free for a couple of weeks, no credit card needed. But this is how I think about the market. Here's Palantir in the Benzinga Ides of March, the Ides portfolio. So here's how I think about this. So stocks wax and wane from overbought to oversold. It happens to everything. The reason it happened to tech, in my view, is because tech is such a broad exposure in the marketplace that there were capital gains packed into tech in a way that it will not be in any other part of the market. And it takes weeks for exchange traded funds and indexes to wash these out through what are called redemption baskets. You can put stocks in there and get rid of them and exchange them for ETF shares. And when they bring them back, it'll be at a stepped up tax basis that you and I don't get. But Cathie Wood will, and BlackRock and Vanguard and State Street will. And that's what's occurring here. So here's Palantir. All you have to know is the dark line is price and the lighter colored smoother line is sentiment, is waxing and waning supply and demand. Well, it's not been good since back here. The last time you should have left Palantir back there, right? So at the very end of January, get on that. Right here, I would say once it starts to tick down, you might miss this little bump, but right here, about the 4th of February, get out of Palantir. Yeah. Now look where it is. So here's short volume. Short volume was 60% of the trading volume then. Not a good time to be in this stock. Now, short volume is half of that. It's 32%, and look at sentiment. It's ticking up. Well, you want to buy the uptick. So I bought it at 25. So I'm up 7%. And I may not stay around long, but that is a pattern that tells me that demand is returning to Palantir. And you want to be where the demand is returning, not where it is peaked. And by the way, materials, real estate, industrials, a lot of those things are pretty long in the tooth in terms of high demand. And you right now, believe it or not, the best sector is tech into options expirations Friday. Doesn't mean that some Ides of March assassination of Julius Caesar couldn't occur, but I would put money in tech right now.
Even though we've had this rally, because I just look at the Qs and I think we went from 300 to 320, and it's like, oh, now we just had I think it's the rally to sell. So I just, from a technical perspective, because the Qs topped out at 320, but you still think fund flows here continue to move into tech.
I do, and it doesn't mean it won't be linear, and it doesn't mean that the technical signal isn't a good reason to take short-term gains. But remember that if you take tech and you sprinkle it across tech, communication services, consumer discretionary, where Amazon is, and Amazon actually looks the best of the fangs at present from a market structure standpoint, it's 50% of market cap. How long will it take for indexes and ETFs to re-weight into tech when it's 50% of market cap? Can't happen in 3 days. It might take 2 weeks. and we'll be right into options expirations. They're going to use futures and options to try to substitute. They won't use all stocks. It'll be stocks, and then 10% of it will be options and futures. Well, I don't think that that's done yet. So I could be wrong, but looking at market structure sentiment, that's what I see, and I'll show you what I mean. So, and you edge users, you can do this anytime. You can look and say, well, look at airlines and cruise ships. They peaked here. They're still pretty good, but short volume's rising and the trend is down. I'm not going to stay in airlines and cruise ships. But if I look at tech, so here's tech. Tech is way below 5, but beginning to make a move back up. So that tells me that if money is going to reweight in the equity market, tech has to move back above 5, back above the axis of supply and demand. Could I be wrong? Yes, but mathematically, this has almost always been true. And how long will that take? 4 or 5 days, I would say, yet.
Let's go look at, those airline stocks. We got news on a few of them this morning. American Air is trading up substantially. Delta's trading out, breaking out. AAL, let's just see what the market structure looks like on this. $24.44. Got up another buck here this morning in full breakout mode here. But what's your system say?
I would still say that if you're fortunate enough to capture that gain, take it. Now, there's no question it has stayed above 5. Stocks and markets that are above 5 have a propensity to rise. The broad market is at 5.6. It has a propensity to rise. If you look at American Airlines over the last 30 trading days, it has never been below 5. And so that tells us that it has a propensity to rise. However, I will never buy this kind of chart. It's not really a chart. It's supply and demand. I don't buy falling sentiment. You want to buy rising sentiment. Look at short volume. It's very low. It's only 30%, but it's well above trend. There are reasons why AAL is up, but I would look at that and find something else. It's just me. It doesn't mean that AAL could continue to rise. It's just that math isn't what I would choose.
Tim, can we move away from this for a second and just talk about Friday?
Yeah.
Friday is going to be a really big day for multiple reasons. It is not just options expiration. It's not just a quad witch. It is an S&P rebalancing. Exactly. And they announced those names late Friday evening, and we can go into the specifics. But before we get into that, can you just talk about how those two things could mess with the flow of markets on Friday?
Right. And I often try to be out of my positions during options expirations because they cause things to behave in unexpected ways, no matter what else we might be looking at, whether it be technicals or in our case, market structure. It's a difficult thing. And here's what occurs. Why do options expirations matter, and why should traders pay attention to them? Once again, we go back to this 65% of assets under management in the United States. 90% of volume in the equity market is in some fashion or another not rational. It's tied to a benchmark, a derivative, changing prices. And because of that, there are course correct. If you're following a course, if you're pegged to a benchmark, it's like a map. Periodically, you're going to have to check the map to see if you're on course. And that's what options expirations are and month ends for passive money. We do a course correction. If there's been a lot of volatility, you're not going to be tracking the index, and you're going to have to true up your tracking. If you don't, if your deviation from the benchmark is 2% or more, it will harm your ability to sell your products through financial advisors. You got to be under that level. So you're going to work really hard to try to be trued up into expiration. So you've got index rebalances. So an index will say, now we've made changes to the benchmarks. And then all the money behind that may be weighted variously. If I'm trying to be weighted to the S&P 500, but more skewed toward value, how I true myself up will be different than somebody who is trued up to growth or who trues up to volatility. All these things come into play. And that's why it's such a big deal. And it's not one day. The mistake people make is thinking, well, this all happens on Friday. Well, no, it doesn't. There's no way all the chairs can be musically circled and reseated on a day. It will happen into them through VIX expirations on Wednesday. There are index options that expire on Thursday, then quad witching, index and stock options and futures. That's 4. That's why it's quad witching. All on Friday, plus index rebalances. Then on Monday, a whole new series begins trading. Tuesday, the banks that help everybody true up, they're going to have to sort out their hedges. All that stuff is messy, lumpy stuff in a market that has no liquidity. And so that's why this is a very big deal.
Why'd you say no liquidity?
Because look at this, look at our screen. So Delta Airlines, huge company, can only trade $6,000 of stock before the price changes. And look at this, 44% of the trading volume is borrowed. That's a pretty good number. Anything below 50 is okay. Look at Royal Caribbean, 55% of the trading volume is borrowed, short, manufactured out of thin air. That's because there is very little liquidity. You know, as we've talked about this before, if I have a beer, which I would if I were in Germany, because you can drink beer for breakfast. I hand it to you, and you hand it back to me, and I hand it back to you. The volume is 4, but there's still only 1 beer. So imagine if everybody is after a beer. Well, there aren't enough to go around, and that's the reality of the stock market, and it's why it's so difficult for big money to move, and why it uses options and futures instead. If I can't buy this basket of stocks here, I might be able to go to Goldman Sachs and say, hey, give me a futures contract that represents all this stuff. Well, then Goldman Sachs is going to go hedge itself to provide that contract, and then the people on CNBC will interpret this as a reopen trade, and it's got nothing to do with that. It has to do with these market forces that clash into each other. But we can see all of that. That's what sentiment and short volume show us. They show us the trends and the ebbs and flows and where is money going. And I think it's going to tech. That's what I think.
All right, Tim Quast, he joins us every Monday from Market Structure Mondays. He is the founder and CEO of Market Structure Edge. The link has been up on the screen there for the last 10 minutes. I also put it in chat. Tim, we'll talk to you next Monday after this whole thing shakes out.
Tim, one
Yes.
suggestion. You could change your name, your last name, and put an N instead of an S in there.
And I would be the majority owner of BMW. Exactly
Tim
right.
Quant.
Quant.
We appreciate your insight as
All right.
always.
Thanks a lot, Tim.
Always fun to see you guys.
Thanks,
Have a
Tim.
good week.
All right, let's just get to some of those names. I mentioned the S&P announced the rebalances late Friday evening. I think it was at 7 o'clock. For purposes of this show, we will only focus on the S&P 500 adds and deletes.
We're snobs.
Because we're snobs. So NXPI is replacing FLS FlowServe. That's one here. Joel, why don't you bring your charts up so we can see?
Okay, I will share.
Yep. NXPI is replacing FLS FlowServe. Penn National, Generac, and Caesars are all also in. And they are replacing SL Green Realty, which is SLG. They're replacing Xerox, XRX, and they're replacing Vontier, VNT. So NXPI, Penn National, Caesars, and Generac are in. FlowServe, SLG, Xerox, VNT out.
One thing to remember, and I've traded the rebalances for a lot of years, everyone gets the Tesla on their mind that, oh yeah, it's going to go up 50% because of God S&P. Tesla was a very unique situation because it was such a large component. But believe it or not, if you look back at the stats from the last 5 years, there are instances where stocks get added to the S&P and they actually go down. That is possible because it's about the net selling or net buying. Sometimes they're coming out of an index that they were a bigger part of, and they're coming into an index where they're going to be a smaller part of, and they can actually be an overall rebalancing effect of a net sell. So you have to just be careful this morning chasing Penn up $9. It's up 9. That's all nice. Yes, it's getting a lot of headlines from CNBC, but it's not going to be the 6th largest component in the S&P. It's probably going to be a very small component in the S&P. Yep. So just be careful chasing these. The initial reaction was NXPI was ripping, and Penn and Caesar were not really rallying much on this until CNBC gave it love an hour later. So just be careful chasing up Penn and Caesars here this morning, thinking they're going to rip up 50%. they're likely not to. It was, you're thinking the Tesla, it's not going to be the same because the net buying effects are not going to be the same. So I'd be careful chasing Penn and Caesars here.
Do you know what they're coming? What are they coming out of? Did you say that, Spencer?
Well, they're in the mid cap, so they're
They're
going.
probably a larger component.
Yeah,
in the
probably
mid-cap,
big.
so.
Yeah, with the way they've appreciated in price. Yeah, I'd imagine so.
Yeah, so those 4 NXPI, Penn, Generac, and Teachers are going from the mid cap 400 to the S&P 500, and the 4 they're replacing are going down to the mid cap 400.
Just be careful blindly chasing S&P ads. It doesn't always make money. That's my point.
Yep, great.
Tesla was a unique animal, and we all knew that everybody had to buy because that was just such a large component.
It's not every day that the 5th or 6th largest component gets added, right?
These are going to be small components, and there could be some net selling effects here, believe it or not. So I wouldn't pay up $9 for Penn.
The other thing I'll say though, to sort
Just
of fly in the face of what you just said though, Dennis, is I think maybe with regards to Penn at least, you underestimate the delay in news flow in reaction. It wouldn't surprise me if a lot of people heard about this for the first time over the weekend or this morning, and
that's why it's up.
Right? No, I know that, but I'm saying maybe I mean maybe those people haven't even bought yet. Is what I'm saying. Right.
Maybe. And that's one thing that I do struggle with. As you know, a prop trader, I'm very quick on the news. Yeah. And I think a lot of times I'm like, okay, I'm one of the first people in, I'm one of the first out because I underestimate the lag time from, the general population to process that news. Yep. So it's a good point you're making, and I probably leave a lot of money on the table by obviously getting out too soon. Like I'm like, okay, this is bullish. I'm going to buy the stock. And then it gets the pop, and I was like, okay, that was the S&P pop. And then, they talk about it on CNBC all day, and everybody buys it all day, and it can continue higher. So great point you're making there, Spencer. Just keep an eye on where it opens today, I would say. If you're going to trade Penn and it opens, let's say, at 139, and rips up to 142, 143, starts coming back through that opening price, be careful. But don't just necessarily think that's going up 50% because it got added to the S&P. That's the point I'm trying to make.
Okay. We did have a merger this morning. You want to talk about that?
Yes.
SJR and RCI, Canadian Telecoms. Shaw Communications is being bought by Rogers Communications for $40.50 a share in that's Canadian dollars. So the U.S. conversion is $32.48 is the U.S. price there. $32.48 is what Rogers is paying for Shaw. Comes out to a $26 billion deal in Canadian dollars.
And then there were 2.
Yep.
We got Bell and Rogers now. We believe in choice in Canada. We believe in customer choice. We give you Bell or we give you Rogers. Which would you like? I mean, there is some smaller companies, but it's the truth. I mean, when you're in Canada, everything, and Cogeco was a player, but, they were talking, did Rogers ever buy Cogeco? They were supposed to. That was rumors. I don't know if that ever materialized. I don't know. Anyways, Shaw, huge player, obviously Canada, and now all of a sudden joined the team with Rogers. I mean, Rogers is everywhere. I have a Rogers phone. I have Rogers cable. I mean, if you're in Canada, you're usually using TELUS is there too. We should give TELUS some love. But you got Rogers, Bell, and TELUS.
What's the symbol on Shaw?
SJR.
I mean, don't they have antitrust or anything like that in Canada?
Oh, we have 6 banks, Joel. We don't have customers.
Antitrust.
We're a socialist country.
Come
here.
on,
we
Trudeau.
don't believe in 1,000 banks and 1,000 telecom companies. We protect Ma Bell. So obviously we spun off the government years ago there, and there's still protected interests here because for years, you've had DirecTV, Dish Network, all of them trying to get into Canada. They won't allow it. They won't allow them into Canada because that would hurt Bell's market share.
Wait, Dennis,
Bell.
Brock is asking if you've heard of Tech Savvy, which apparently he says is really good.
There's a lot of smaller players. So there is some smaller players. Tech Savvy is another one. I've had a friend that's on Tech Savvy. There's a lot of smaller players that do provide, MNSI in the Windsor area. There's smaller players too. But the big names that are everywhere, there's just a couple. Like you think about how many big names provide, there's a lot more choice. And that's in all industries. I mean, for thinking about it, we just broke the monopoly on beer. A decade ago in Canada, you could only buy beer at the beer store. Where do you buy beer? You buy it at the beer store. It's government regulated, government controlled. You cannot go to your corner store and buy beer. They finally broke that about 10 years ago, and now you can actually go in to some of your corner stores if they're licensed. You can go in to your grocery store and you can actually buy beer. So it took a lot of years for us to actually break that. But in a lot of cases, Canadians are easy going. We like our hockey games. Give us some beer. It's all good. It's all good. We don't have choice. We Rogers tell us, Bell, well, that's okay. It's providing me my service, and I'm good. We don't believe in price competition.
How many maple syrup makers do you have?
Oh, there's a lot of maple syrup.
Oh, really? Anybody that can tap a tree?
I'm making maple syrup in my yard here right now. I got those trees tapped. Triple D's maple syrup. Look at that. That's a joke, but.
All right, S&P's just hanging out on a little bit under unchanged here, just down a couple points. Pretty quiet morning here. Struggling with the close at 8:59. Spencer, anything else you want to cover? Or do you want to go on
Dennis teased it. We did have some data this morning out of a couple airliners. I want to go through that real quickly.
Sure.
So Southwest, they reported passenger demand and operating revenue were in line with their expectations for February. They continue to see negative impacts, but they said load factor for March, they see that being 65 to 70%. They expect April's load factor to go up to 70 to 75%, so increasing that. We also had some data out of, I believe it was Delta. Yeah, Delta said the total revenue was at the low for March was at the low end of their prior guidance. They're seeing an average daily cash burn of around $13 million a day.
$50. Just keep an eye on $50. We are trading above it, but boy, oh boy,
Breakout, man.
Yeah, huge level here.
Huge.
And then can we just look at Ride real fast before I bring Chris Temple on? Ride is interesting here because there was a short report. Was that Friday? Yeah,
yes.
Friday. And it pretty much it opened like at the low right there, right?
Hold on.
Yeah.
It's holding up. The stock has been punished. I mean, and we know when they get down near 10, they seem to find a floor. The SPACs seem to, even though they're post-SPAC, they still, a lot of them, besides Clover, a lot of them seem to still find a floor, near the $10 level. So as you get down to 12, 13, 14, you seem to find buyers here. Yeah. It's a nice bounce back here for Ride this morning, bouncing a little bit here. I don't know, but it's sold off significantly. It kind of feels still like it's in the middle of nowhere, though.
Let's see if first things first. Let's deal with Friday's high at 15.54. Looks like you did trade up. You're just kind of creeping up there. So once you get above 15.54, you got the gap to fill up at $17. So let's see if we can take out the high from Friday.
All right, let me bring on our next guest here, Chris Temple from the National Investor. And Chris is a value guy, right, Chris?
You betcha. How you doing, guys?
It's good that we have you on today. We had a whole conversation a half hour ago about is this another like fake out when it comes to value rotation, or is this going to be the real thing? Is the Reddit crowd going to actually drive a long-term meaningful rotation away from growth into value? We'll start with there. Your thoughts?
I don't know if it's going to be the Reddit crowd doing it. I've got some doubts about how knowledgeable these people are on the markets when I look at some of the stuff that they've been doing, Spencer. But look, certainly Jerome Powell is trying to drive the value trade and drive some major rotation within the markets. So far, so good for him. We had a point several days ago where the NASDAQ was 11 or 12% off of its all-time high, and yet the Dow and the S&P were still near their record highs, and Powell wants more of that. The question is, does he go too far? Does he let the bond vigilantes have too much rope and we sail above 2% on a 10-year treasury and everything gets hit? But I like the theme of rotation into value. It's kind of my forte, so it's a fun time for me.
But are you, I mean, how are you thinking about this now? Are you going like long-term thinking, okay, like value is back, or are you still like cautious here?
I'm getting more optimistic, Spencer. The trouble is, again, Jerome Powell's tenure as Fed chairman has decided he is going to embark on a certain policy that has some risk in it to try and get some froth out of the markets. He's hopeful that that remains orderly and controlled. like it fairly much has so far. He would love to see the NASDAQ drop 30% and the S&P 5, for example. He would love to see air come out of Bitcoin. He would love to see some comeuppance to the more silly and speculative and idiotic activity of the recent past, all of which he enabled, of course, starting a year ago when we needed the Fed to guarantee liquidity and they gave us a water park instead. So hopefully this pays off for him. I have my doubts, but I think one way or the other, even if there's some stutter steps along the way, we are getting back to a place where we're going to have rotation into more valuable areas. There's going to be a comeback for dividend stocks, for story stocks. And again, the really high PE, the momentum stuff is going to underperform.
So, okay, there we go. You're bullish, value, bearish growth, at least for the time being. But what specific areas, though? What kind of value stocks we're talking about? Unless it's just anything with a PE below, like, I don't know, 15.
Well, that and also stuff that is going to capitalize on the themes that are hopefully still going to be unfolding in Washington, the two big ones being infrastructure and green energy. Mm-hmm. Since Election Day, 16 different picks on my recommended list since Election Day have doubled or more. Only one of them has anything to do with gold, which I've been ambivalent to bearish on since last summer. But you're talking green energy, medical devices, biotech. There's so many great stories out there. It's hard to keep track of them all. And I also think that value has got to roll. For people who are conservative, I've been in love with CVS and Walgreens, for example, among others. Ingles Markets, my favorite grocer, has been doing extraordinarily well. And that's still something that's going to be $100 stock if they only had a valuation similar to Kroger.
Well, you said green energy, though. I mean, that's pretty growthy, right? I mean, here's the chart of TAN, the TAN ETF, and that thing quadrupled from a year ago.
Well, so, let me clarify then, Spencer, sure. What I said. There are some areas that did get overdone, lithium stocks, some of the solar stocks, and so forth. Generally speaking, I'm talking about uranium, which has had a nice move, but is yet to really be embraced. There is not a single raw material I am bullish on more than uranium, because all the stars are aligning worldwide for a resurgence in nuclear energy. Longer term, lithium is still good. I think you have to be selective on the types of companies for all of their talk about pushing green energy. The Biden administration has now pulled the plug, at least for now, on a major project in Nevada, Thacker Pass. That's a project in the development stage that's owned by Lithium Americas. So that's not been good news recently, but you've got a couple that have been good. I mean, you guys may remember that I was pounding a table on Piedmont Lithium when it was $6 a share or so last summer. Recently, it was 80. A lot of that was on the strength of their offtake agreement with Tesla. Probably one of the best stories in this space on my list right now is Frontier Lithium, a Canadian company that's already tripled since late last year. But the next step for them when they announce an offtake agreement is they'll move the decimal place to the right. So that's still going to be a huge winner. So there's a lot of company value. There's still good stories. There's still good themes going forward because of the increases in technology and our everything we're doing, biotech, medical technology. I mean, we'd be all day going through the list of them.
When you say infrastructure, well, I'm also interested in that, but I haven't actually pulled the trigger on anything yet. What's on your radar for infrastructure? Because I'm looking to maybe de-risk a little bit on the growth tech front.
Infrastructure is going to be just the garden variety stuff. The energy technology stocks. There's a couple of ETFs out there. I'll give you a real oddball one.
Okay.
Look at the ticker symbol MAPS. MAPS. It's on a Toronto exchange. A company called ProStar. They are becoming the Google Earth of the underground. They have a state-of-the-art patented process where anybody that needs to do any kind of work on creating roads, working on real estate projects, industrial projects, whatever, we've all seen sometimes in our very own yard, the linemen come, the utility guys come, they put the spray paint lines on the ground, they put little flags in so we know where the power cable is. We know where the gas lines are and stuff like that. Nobody has automated this for years. People are still doing it the old-fashioned way. Constantly there are accidents of these things getting hit. And this company just came out public not long ago. And they have got, again, the Google Earth of the underground. So this is kind of a cool story that I recommended recently. But, all the usual suspects, anybody that makes cement, copper, cables, all different kinds of things to repair and build roads, bridges, railroads, all different kind of stuff. Someday, I doubt he'll live to see it, we're going to have high-speed rail in this country. We're going to have more mass transit in this country. It'll be powered by hydrogen like they're starting to do overseas. You look at the number of hydrogen and electric powered buses in China. There's something like 400,000 of them. You know how many we got in this country? Pretty much none. So there's all kinds of things coming down the road. And again, there's such a menu of things, Spencer, it's hard to know where to start.
Tetrahedron in the chat. The ticker that Chris gave was MAPS. That was in Toronto, though, in Canada. In the US, I think is the ticker. Is it what's the company? Is it Doxa?
It's called ProStar Holdings.
ProStar Holdings. I don't know.
They actually. I'm sorry.
Do they have a ticker in the US, or maybe they do?
You know what? They do.
Is it DXAEF? It might be DXAEF.
1 second. No.
Pull
it up here for you. DXAED.
All right, DXAED. So
they're going to list on the QB and then eventually NASDAQ. Okay. Again, this is
so super small, guys. Super illiquid. Just very small company. As super early stage, as Chris just said. Okay. We talked green energy. We talked infrastructure. What other areas are you bullish or bearish on here going forward, or at least let's say in the interim, in the next 6 months?
In the next 6 months, right now, I've got people in short positions on both emerging markets and the broad NASDAQ, the triple Qs, and I'll tell you why. Again, and this, if this works out beautifully, Spencer, you're going to make money on the long side as we have the sector rotation and people get into value stocks, the green energy ones that are not overpriced yet and so forth, and make money shorting the NASDAQ at the same time. Because I don't think the average person fully understands this yet, unless they do a total 180 at their Fed meeting this week, and I am not anticipating that at all. The Fed has basically told you that they are going to sit on their hands and watch long-term interest rates continue to rise. As that happens, we will see renewed what was interrupted a bit in recent days, where the rollover in the overpriced stuff, the FANG stocks, the NASDAQ, will resume in more earnest. We'll see financials actually do better. We'll see some dividend-paying stocks do better. And we'll see some value stocks do better. And again, the Fed's hoping that this is orderly, it's controlled like it has been thus far, maybe in stutter steps where you don't have a big blowout all at once, no one's running for the hills, credit spreads for corporate bonds still behave themselves. And so I'm bullish two different things: short what's overpriced and what's going to get hit where it comes to emerging markets as interest rates and the dollar continue to rise. And then at the same time be long to best stories in a lot of different areas of value.
And this is what makes a market, right? Because our last guest just said he's bullish. He thinks tech is gonna come back here, and you're saying the exact opposite. And that's what makes a market is everyone's people on both sides. Okay, Chris Temple, editor and publisher of the National Investor. Are there any before I let you go, any other events that you mentioned? The Fed meeting on Wednesday. We of course have a quad witch and a S&P rebalancing on Friday. We've talked about that already. Any other events, tradable events on your radar?
Well, I don't know that you could say it's a one tradable event, but one of the reasons I say what I do, Spencer, about the outlook that I have near term for interest rates continuing to rise, for the dollar continuing to rise, et cetera, is that we have seen the best now of the year over year comparisons when it comes to the so-called inflation numbers. All right. As we get into the middle of the year, we're going to see inflation numbers that will be well above the Fed's target. The Fed has told us don't worry about it. It's going to be transitory. It's going to be something that we're not worried about. We're not going to react. And in fact, the Fed has told us umpteen times that they want inflation for a while to run above their 2% target to make up for those several years it ran below that. The question is, now that they've allowed some of the bond vigilantes of old that we talked about when I first got into all this a little over 40 years ago to either come out of exile or to rise from the dead, how much rope are they going to give them? Are they going to sit by and continue to watch as there's a mass rebellion in the Treasury market? And not for all bad reasons. I mean, the Fed is not completely disingenuous when they say interest rates are rising because people feel better about things. There's some truth to that. But we also have an uber leveraged system that simply cannot mathematically tolerate interest rates much higher than this. So I'd be telling people to keep a close eye on these new mileposts. We're about to break above the recent consolidation in the 10-year note as we rise more. Be watching these inflation numbers when they come out each month because they're going to get higher, and the market, I don't think, is going to take it as well as it has so far.
One last thing that our chat just pointed out on the value note, does it give you pause at all that maybe you're paying up a little bit? These value stocks that have run up in the last month or so.
What, Spencer? I'm sorry.
That all these value stocks have run up, and now you have to pay up if you want to get in on that value trade. You're paying up basically. You're buying.
Some have had nice runs. I mean, I've got a lot of themes of company Etfs Life Sciences. I think you guys were talking about Alzheimer's. They're my number one pick of a company. They were $3 a share late last year. We just sold some at 25 because they got caught up in all of this fight the short seller stuff recently. They've consolidated again between 12 and 14 bucks. And I'm telling people put new money in it because if they do have a breakthrough for Alzheimer's, you're going to move the decimal point on that. Frontier Lithium that I mentioned, yeah, it's tripled and it's going to move the decimal point once people realize what they've got. So you've got to pick your spots. There's ones I wouldn't chase. Piedmont that I mentioned, I wouldn't be putting a lot of new money in it. Because, I mean, this thing is a 10-bagger plus since last summer. And if the NASDAQ, as I suggest, gets hit more and Tesla gets hit, Piedmont will correct with it because anything associated with Tesla. And we've seen this recently where all of these different battery metals ones that have deals or might have deals with Tesla, they all sold off when Tesla did. So you've got to be careful. You've got to time it. But again, when you kick the tires and look at what the fundamentals and assets of these companies are, there's still a lot of them, some that have had good runs already, some that haven't, that you still need to be buying right now.
All right, Chris Temple, editor and publisher of The National Investor. Chris, as always, thanks for the time.
Hey, my pleasure. Take care.
All right. It is 9:16. Just a couple of housekeeping items before I move you on over to get technical with Neil Hamilton. We're going long today, guys. We are going long. For the past couple of weeks, maybe the past month or two, we've been streaming until depending on the day, 4 or 5 o'clock Eastern time. Nah, not today. Not today. Today we're going live and we're staying live until basically 8 p.m. Eastern. We've got a full slate of evening programming. After the close, we've got the Around the Bell show, which if you missed our first show last, Thursday? I think it was last Thursday, the 11th. And Around the Horn style show, but not about sports. It's about stonks. Super casual, super light, and super fun. I'll be on that show. That's going to be at 5 o'clock today Eastern. We've got a new show. We're debuting a trading show at 6, and then we've got a rail show at 7. So we're going till 8 p.m. Eastern tonight. We got 12 hours of streaming nonstop here on Benzinga. And just another programming note for today, SPACs Attack. They've got the CEO and founder of Owlet, the company that is merging with, or SBG is the SPAC. Owlet Baby Care is the company. That'll be at 11:15 Eastern time. Again, SBG is your ticker on that merger. And that's pretty much my only announcements as far as programming for today, at least. We're working on a ton of new shows this week. We've got Ask the VC, a show starting on Wednesday with Jeff Ransdell. A ton of new stuff. Every week, new stuff. We're working for you, and we're trying our hardest to get good programming out that you want to see. and in a way you want to see it. So hit that like button, guys. Thank you very much. I haven't looked at the like total in about an hour now, so I'm gonna do that right now and see where we're at on the like front. 300 likes. Come on, guys. Come on. 300 likes. We got thousands of viewers. Let's get up to at least 600 likes. That would help me out very much. Thanks to our guests today, both of them, both Chris Temple and Tim Quast. Once again, today's show is sponsored by Market Structure Edge. The link was up on the screen. I'll put it up there again now, marketstructureedge.com to learn more. If you're listening to this show via podcast, please remember that all the information from our show is meant to be used as informational purposes, not for investing or trading advice. Okay, I don't know what happened to my voice. My voice just decided to go on me. That's a little strange. But that's going to be a wrap for me. Get Technical with Neil Hamilton is on right now. I'm going to end this stream, and you'll go straight over to Neil. I'll see y'all at 10:45 for our news desk update.